Let's now begin the panel discussion. Can the panelists come up to the stage? Please welcome the panelists with a round of applause. I now will give the microphone to Mr. Murai, who will be serving as the moderator for the panel discussion. Good morning. I'm the MC of the panel discussion. I'm Murai of FinCity Tokyo. The title of the panel discussion is Impact Investing, and today we have emerging managers who started up their companies in order to promote impact investing. 3 companies will be featured. Impact investment in itself is an emerging area, so these are emerging managers in a way. The objective is to identify the essence of impact investment and the challenges, and to have the investors deepen their understandings on impact investment, and to also learn about the unique perspective and strategies of emerging managers in order to describe the diversity of impact investing as well as the potential of impact investing. Could we have the slides up on the projector, please? We have been given 45 minutes and we will be taking up 4 themes. Next page. First, we will ask each panelist to introduce their own companies in 3 to 4 minutes. Could you cover 3 points? 1, the history of establishing impact investment company. Second, the uniqueness of investment at your company. And thirdly, and through investment, what's the vision you wish to achieve? These are the 3 points we wish you to cover. First of all, Sakamoto-san.
Could we have the next slide, please? Thank you. Good morning, ladies and gentlemen. My name is Sakamoto from Kadira Capital Management. Kadira Capital Management was established in May of 2023, and a listed Japanese equity, sustainable investment is what we occupy ourselves with, and so we are such a managing investment manager. To feed the investment chain forward. That's the mission that we have. Investment chains, as you know, are such that investors provide capital and the operating entities engage in business and generate profit and provide profits to the investors. The value creation process is such that it has contributed to economic development, and that is without a doubt. On the other hand, there's global warming and growing disparities. There are side effects which have been seen, and here again, I'm sure you will not deny that. And so in terms of our mission to feed the investment chain forward, as is shown here, the investee companies are shown on the second box from the right to global environment and to the society to create a positive impact so that the stakeholders will become more affluent and to create a stronger business base, and it goes to the final ultimate beneficiaries. So feeding the investment chain forward is, I believe, very important. So the investment chain itself becomes sustainable investment chain is what I've written here. And to materialize that is what we aim to do in our activities, and specifically listed Japanese equities are what we invest in, as I mentioned before. we do research on every company. So in order to measure the corporate value, what kind of investment company impacts are being generated for the society, and we incorporate that into the corporate value case. And by engaging in such activities, we through investment and through dialogue, we want to drive the investment chain forward to create a sustainable society. That is what we do. And lastly, the name Kadira. It means chair in a certain region. And on the upper right, it says Kadira Capital Management. We've used the initial C and M is what we use to depict a chair. And that is represents the fact that we're always mindful of the stakeholders in our activities. That represents our philosophy of this kind. Thank you.
Thank you. Now, Mizuka, please. Good morning. I am Oka Yuko of SDG Impact Japan. Thank you for inviting me to this panel discussion. I'm greatly honored to be able to participate as a panelist, and we have been chosen as one of the EM Showcase, and thank you for selecting our company. Let's share our slide. Next page, please. SDG Impact Japan is a company that the name describes. In other words, we are in the business of promoting SDGs and generating impact. Our mission is to create a new flow of capital and promotion of innovation in order to realize the next generation sustainable society. And in terms of creating a new flow of funds, it can't be unilateral. There has to be financial return to be generated. So there has to be both sustainability promotion as well as return on economic investment. The founding members are as indicated on the bottom right. There are 3. They thought that the external diseconomies are overlooming. So now is the time to begin a business to solve social challenges, to invest in technology or to invest in startups that are trying to solve social challenges. They are from financial institutions and international organizations with backgrounds in these sectors. They have different backgrounds, but after the 3 founding members got together, like-minded people, close to 20, have gathered together to run our business. Now, in creating a new flow of funds, we are doing both fund and incubation businesses. And in the fund business, we are not trying to do everything by ourselves. In some cases, we would partner up with like-minded managers in order to maximize impact. That is our priority. One uniqueness is incubation. We run our own operating business. We run an engagement fund of listed stocks, and we use such findings to further upgrade engagement. Next page, please. Thank you for selecting our fund, Next Gen ES Japan Fund. We focus on small and mid-cap listed companies in a selected manner. Promotion of sustainability can lead to elevation of corporate value. That is our belief. And we try to look for companies with potential growth. They are already high performers, but we try to look for companies with high potential. And we try to promote sustainability as well as impact investment return. Next page. The objective of sustainability is categorized into 4 areas: environment, social governance, and gender. In the case of environment, we try to rectify the climate trajectory of the portfolio company towards 1.5 degrees. And also for gender, we try to solve the gender balance and gender gap. And we try to do these initiatives in a way through constructive engagement so that the corporate evaluation is elevated. Through our engagement activities, this is the diagram of what we intend to do. There are 27 companies in the portfolio. We identify the ESG strategy and identify the offensive ESG and defensive ESG for each portfolio company in order to leverage the strategy. And further, by implementing ESG measures, we try to minimize risk, which will lead to increase of cash flow and corporate value increase through reduction of risk. And we try to do sufficient dialogue and disclosure with the capital markets in order to generate both social impact and financial return. Now, environment, social, governance, and gender, these are the sustainability objectives. And for each of those four, we have 2 KPIs. And by improving these KPIs, we are trying to improve our results. So funding gap was 2.5 trillion before the pandemic. It's now over 4 trillion, and funding gap is expanding, and the average climate increase, average temperature increase is now over 1.5 degrees. So our activities may be small in scale, but we want to generate maximized impacts. Sorry for the long explanation. Thank you very much. Could we go to the next slide then? Next one. Hata-san, please.
Good morning, ladies and gentlemen. I am co-founder and general partner of Glen Impact Capital. My name is Hata, and I'm very grateful to have been selected as an EM showcase company. So I'd like to, in the interest of time, I shall only be able to give you a high-level explanation, which I will proceed to do. In 2020 is when we have established we're an unlisted growth equity in Japan. In terms of investment themes, there are broadly speaking 3: climate change and environment, and healthcare, and social inclusiveness. And these are the areas of focus in terms of our investment. In terms of our mission, there are 2. Firstly, our investees, and through their activities, we want to have a positive impact on environment and society, and also we want to have a positive impact on business as well. And the other is impact investment. We want to penetrate that more. With a view to doing that, we've been conducting activities, and later on, I believe I'll have an opportunity to touch upon that when we have our panel discussion. Impact measurement, how that is done, and what is impact to start with. There are many parts that are not clear, and practitioners actually have to create cases to demonstrate what it is, and they have to do that in agreement with others. And so that is the awareness we have in terms of our activity. Next, please. In 2021, we created the first fund, and we have invested in 8 investees. And 2 of those have IPO'd already. And in terms of performance, compared to normal funds, things have been developing very smoothly. So there are people perhaps who think that impact investment does not lead to earnings. But I wanted to show that there are cases where we generate income. And that is the thought with which we conduct our activities. And this is the economic aspects, how we make that consistent with having an impact. On the left-hand side, that's revenue. how our revenues have grown since we've started investing. On the right-hand side, it shows the impact generated according to our investees, GHG emissions and the use of fertilizers and soil and employment of those with disabilities. The impact differs from company to company. In business, social impact is incorporated, and so we invest in such companies to achieve growth. So that to the society and to the environment, we want to have a large impact. And that is what we have done as investors. Next, please. And so scale is what we focus on, and that's the focus of our fund. And so therefore, growth equity is our area of activity. I'd like to dispense with the details from strategy and creating a framework for the strategy and execution. We do a hands-on type of activity in our business. So Fund 1, the Glyn Fund 1 has come along very smoothly, and we expect to launch our second fund this year. Moving on. The investment team comprises these 6 persons in the impact area, and in our 3 areas of focus and investment, these people have knowledge. And so with these members, we are moving forward with the investment. Thank you very much.
Thank you. You are all emerging managers. That's one common thread between the 3 of you. But Sakamoto-san, you invest in listed Japanese companies. Ms. Oka, you invest in listed Japanese companies as well as non-listed global companies. Hata-san, non-listed growth stage companies. Some of them are non-Japanese. Those are your investees. So thank you very much. I'm sure that you will be able to share diverse perspectives with us. Let's go to the first topic for discussion. If we could have the slide up on the screen. First, impact investing is relatively a new concept. So there could be misconception as well as bias. So I ask the 3 of you, what have been the challenges in terms of misunderstanding regarding impact investing? First, Hata-san. When you communicate with Japanese institutional investors, what's their understanding on impact investment? Have you found difficulties in giving them the right understanding?
Thank you. Broadly speaking, I believe there are 2 in terms of misconceptions. First, as I mentioned at the outset when I previously spoke, impact investment, people think it may be concessionary. And that's the first point. And secondly, what's the difference between ESG investment and impact investment? So we don't need to be fixated on the definition, but we receive questions on the differences between the 2. And I've prepared a slide concerning this. Could you show that? That's something that I touched upon earlier on. That's the first slide. Impact investment is such that globally it's divided into 2 categories. And the way they divide it is on the one hand side, financial return, is that equivalent to those in the same asset class, or could it be concessionary? That's the division. Market impact investment, or below market, or impact first impact investment. That's where the line is drawn to make the distinction. Globally, the market started with impact first, but recently a market rate area has developed. Global AUAs, 80%, over 80% is investors in the market rate, and this is where we are active. As mentioned earlier, within the business, we find the impact, and then we invest to achieve growth. And so with regard to misconceptions, not all impact investments are concessionary. That's the first point. And secondly, the next slide, please. ESG and impact, the difference between the 2. Recently, we've drawn an analogy with athletes to explain this. athletes as such that they have financial capitals, and that's visible. That's the muscle which can be seen. ESG, the non-financial capital, is the internal organs. If you draw an analogy of bodies, if you do doping and it's bad for your health, and you can run hard, but you can't last very long. So you have to perform with sustainability, and you have to work on your internal organs to keep them in good condition. Impact, on the other hand, is the performance of the athlete. That is how we see it. And the performance is such that there's financial performance and there's impact on the society. There are these two. And so ESG is the body and the inner parts of your body to enable you to run. And impact investment is the outcome of what you achieved as from running. And that is how we explain it.
Thank you. Impact and return may not be compatible, and one is the misunderstanding on ESG. Those are very salient points. Sakamoto-san, please go ahead. Hata-san's company invests in unlisted companies. You invest in listed companies. What is the unique difficulty in terms of listed companies?
Thank you. I have also prepared a slide, and Hata-san talks about market return or above market return or under market return impact investment. I've talked about our strategies, which considers the impact in Europe, and the Japanese institutional investors. When we explain to them, somehow we were talking past each other on some occasions, and so we were thinking about how I could explain this, and that is the slide I have come up with. On the left-hand side, you have the return-only type of investment, and ESG incorporated. ESG is integrated, but we still pursue return. And while pursuing a return, we achieve that through pursuing impact. In the middle, the upper level, we've shown that. And below that, there are two boxes piled, and there's a reason for this. You pursue impact, but you want a return over the market, above the market. And then there's the below market return strategy. On the very right-hand side, we have the impact-only pursuit. It's sort of like philanthropy. And what Hata-san has mentioned earlier, the line, is the lower level, above market and below market return. It's between the two. If you think about listed companies where impact is considered, what often happens is what happens where the red line is. Above market return is what we seek. But on the left-hand side, investment strategies based on financial return. There are some who pursue that. On the right-hand side, there are those who are impact-oriented, and a lot of times they don't understand each other. They talk past each other. And so unless you practice impact strategy, this is not heard. So I'd like to talk about that. For example, in the investment universe, when you talk about the investment universe, on the left-hand side, you have the return-only people, and they want the investment universe to be as big as possible so that they can select from a broader universe to generate return. It's easier to do that. On the right-hand side, people on the right-hand side feel that they first have a clear target which they wish to achieve. And there are companies who try to achieve that through services, and they want to select these companies. And so they select a theme, and it's necessary to do that. So in terms of investment strategy, you have listed companies and you pursue return and impact. If you try to pursue both, it's extremely difficult, and that is what we feel in our daily activities. Unlisted, and also with regard to listed companies, there's if there's a vertical line there. Listed companies is a horizontal line where you have a strategy where you proceed from the return pursuit, and then there's a perspective from impact. impact. And so how is that to be designed? That is what is less understood in our daily activities. Thank you.
Thank you. Hata-san and Sakamoto-san, you talked about achieving return and impact and ESG misunderstanding. Those are frequently occurring misunderstandings. But from a slightly different perspective, can you add some spice to the conversation? I'm not sure whether I can cook a spicy meal, but at our company, as I touched upon, we are thankful of selecting our listed company fund for EM Showcase. But we are focusing on decarbonization projects or agri-food impact fund. These are some of the funds we manage. And what's the difference between ESG investing and impact investing? ESG focuses on risk and impact focuses on impact. Maybe that's a difference, but personally, I don't think we should worry so much about the labeling or definition so rigidly, because in essence, in the case of impact investment, it's all about how much impact the fund can generate, and that's the core. So when there is a label called impact investing, yes, format is important and procedures are important, but if you become too particular, maybe you end up not being able to do impact investing to the extent you wanted to. And as mentioned by Sakamoto-san, the impact between listed versus non-listed equity. And companies that create impact would be more towards the non-listed side, and then there are listed companies that are more mature. So the management of the company, to what extent is the management accommodating to sustainability, like including human rights and social challenges? And I think we apply the wide definition on impact, that those are some of the areas where impact is being created. This was in one of your slides, and I prepared a slide as well. This was already shown to you, but in what way do we try to generate both impact and return? We try to explain that point to the investors, and I think that kind of endeavor is very important. In the case of listed equity, where are the value drivers and how do you improve those value drivers in order to contribute to growth? And what would be the sustainable impact that could be generated? And bring that into the diagram and show that those are both compatible. And then on top of that, if we could go to the next page. When you compare sustainable versus conventional funds, traditional funds, and compare the returns, of course there are bumps, and in the short run, sustainable funds could underperform. But the overall trend is, of course, there could be some backlash, but I believe that this is the major trend, the overall trend, that sustainable funds can outperform. So if you invest in those companies, you will be able to generate investment return. And I think that's already being realized. Thank you very much. Social return leads to economic value. That should be made visible so that it could be well understood by investors. Thank you for touching on that important point. Let's move on to the next theme. Thank you. The next theme is impact investing in Japan, current trends and challenges. So my question would cover 2 points. First, in the most recent year or two, what kind of evolution has taken place? And then on the other hand, where are the areas where no progress has been seen most recently? And again, Hata-san, please go first. So what's the progress in the most recent couple of years?
Thank you. I'm sure many of you know this already. the impact, the area of impact investment is such that there's a lot of momentum now. There's an increase in momentum. Maybe I'm advertising a bit, but I believe objectively we can say that AUM growth and the number of impact approaching entities have increased. And what was large was that, and this is perhaps preaching to the choir, prior Prime Minister Kishida espoused the new form of capitalism, and impact finance was referred to in this context. And financial institutions and government agencies became aware of impact finance and started action. And I believe that is the motive force behind this momentum. Among financial institutions, some have said impact orientation financial declaration to increase funds for this purpose. The top management have signed on to this. There's a financial institutions network, and 3 years ago there were over 10 or so, but now there's about 80 companies. So among financial institutions, how they are thinking about how they measure impact. There's peer learning, and also impact. Last year, an impact consortium, a public-private initiative, has been launched. And globally, if you look at this globally, it's still a quite unique initiative. Public and private coordination to address social challenges, to work together. And then, in addition, companies and startup academia are also involved to engage in this approach. And I think this is a major advancement. Thank you.
Thank you. Oka-san. Thank you. As Mr. Hata mentioned, many initiatives have been launched, and financial institutions as well as government organizations like JFSA and startups have begun to be encouraged to engage in impact investing. Most recently, the Grand Design and Revised Action Plan for New Form of Capitalism was adopted. And that mentions that impact investment is legitimate, not illegal. So large public pension funds are also entering into this area, and we're beginning to see a developing ecosystem to allow them to do so. And when we go to various events, conventionally, philanthropy type of people were the majority of the audience and participants. I am originally from financial institutions, so I was probably a new face amongst those philanthropists who came to impact investing events. But recently, when I go to various events to feature those impact investing initiatives, impact investment and risk and return. Impact versus return, that borderline has become rather fuzzy, and I see the convergence of these two groups. Thank you very much. So the convergence of the cohorts. You mentioned that in November, the MHLW came up with the statement that GPIF can engage in investment that considers impact. So they didn't say impact investing, but investing that considers impact. But what kind of impact would be delivered through these investments? Kabuto-san.
Thank you. MHLW made that announcement, and internally within our company, we had active discussions on this. And if you could go back to the previous slide, which I showed. Thank you. Earlier, I referred to the investment strategy, and how do you strike a balance between return and balance? If you look at the MHLW publication along with the minutes, within our company, our understanding is such that it's toward the middle, the upper box, return with impact. That is the strategy which MHLW defined since GPIF was started. And as I mentioned before, from different perspectives, you look at impact, pursuing investment and make that compatible with return. There are two different perspectives. There's not much understanding on both. But this announcement enhanced understanding on the upper box, which is indicated here. Thank you.
Thank you to the three. You focused on progress made, but where are the areas where progress is lacking? Mizoka, please go ahead. Thank you. I prepared a slide. Thank you very much. As I mentioned already, various initiatives are taking place in impact investment. Momentum is on the rise, and the asset under management, both investment and loans, are increasing. On year, there has been an increase by 200%, close to 200%. But when we look at the global stage, we find that Japan is lagging behind. Against the size of its economy, there's still much potential for growth in impact investment. And also, in the midst of growing loans and investments, impact investments and impact loans, the shaded portion with the lines is loans. And it is growing, but you see that the majority is accounted for by loans. So funds or pure investment is not growing so rapidly, and not enough capital is flowing into such investment. And the right-hand side diagram is sustainability Japanese domicile funds, AUM, and the proportion of the sustainability funds. And it's as low as 0.7%. That's the reality. So there are very few offerings being conducted. So that's where we hope that we could see more growth in the future. Thank you very much. Mr. Hata.
Thank you. Where I feel that there has not been much progress, and this is something that I touched upon initially, what's the form of impact investment? It's not clear. Impact, people feel, is very clear, is not very clear. And so there's a lot of room for interpretation. I think there's a lot of that which still remains. And if practitioners create examples, and in doing so, those people who feel that they're interested in impact, but they don't know how to go about doing it, will find it easier to approach through these cases being established. For example, impact investment. Why do people invest in impact investment? And then there's the how. And maybe you can clarify, for example, in the why part, the financial return and impact. There are areas where both are consistently achieved. And such cases, however, have not accumulated in Japan. There's not a sufficient number of cases that have been accumulated. So to create these cases to communicate. And then as to the how aspect, how do you measure the impact? There are things that are easy, such as GHG, or among social issues, challenges. You don't know how to set the challenge and how you measure that. What ruler you use to measure that, and yardstick you use to measure that. You need to create a common yardstick and common understanding concerning this. On the what part? You have a limited amount of money. How do you allocate that to different social challenges? And this is the kind of discussion that we need to engage in going forward. From the government, it's probably hard to try to demonstrate that. So the private sector should show the social challenges and where money is needed. And if we engage in these discussions with approval from the government, we can proceed. And I think that would be a good way to approach. Thank you.
Thank you. Hada-san, you mentioned rulemaking. And that's not a simple task. Sakamoto-san, what's your view?
Thank you. It's different from the answer that I initially prepared. But this, as shown in the slide that I showed, in terms of investment strategy, how do you design it so that impact and return are both compatible? And that has not been done yet. What Hata-san mentioned, how to measure impact, it's very difficult. And if you look at it from the other side, how do you measure return? That is the question. Of course, there's a clear criteria as regards how to measure that, but that doesn't mean that there is generates return. Strategies that generate more return than the market average is very difficult. What team, what process, what portfolio to use to manage discussions on that area. Is not only about pursuit of return, it's also about pursuit of impact. In terms of investment strategy, how do you design? I believe there's insufficient discussion on this point. Thank you.
Thank you very much. That's a worthy topic to delve into more deeply, but time is constrained, so we have to go to the next topic. The final topic is future and opportunities of impact investing. What do we need in Japan to raise momentum? As emerging managers, you're in the position to introduce new trends. So first, Oka-san. We've talked about many subject matters on impact investing, but impact investing in itself is not something completely new. But having said so, impact and return, both to be pursued, would depend on design, as mentioned by Mr. Sakamoto, and that's the role to be played by ourselves in the private sector. And we should do more communication that both can be achieved. And also, this has to do with emerging managers, but we could become catalyzers. There are catalyzer funds that are attempting to do something new. So can you invest in such funds? By creating a track record through partnership with like-minded actors, we can more strongly communicate this message, and I think that's important. There are various frameworks. Framework is important, but just do it first. And then gradually we can make adjustments in order to polish our investments. Thank you. Thank you, Ms. Oka. Mr. Hata.
Yes. Very briefly, as emerging managers, we are focusing on impact investment alone. There are no other products, and we're focusing on this in our pursuit. And as mentioned earlier, we want to build cases. And I believe we hope that will send embers to the areas of others who are here.
Thank you. In Japan, in order to increase momentum in impact investment, emerging managers have to play their roles, right, Sakamoto-san?
My message since earlier has been that, those who are listening to this panel discussion have noticed that the impact investment is yet a not fully discovered area, a not cultivated area. And so startup emerging managers, we have flexibility, so we want to play on that to attempt new things. And so the role that we have to play is a major one indeed. And lastly, if I could show a slide. I talked about the GPIF, and it's related to this in 2015, where ESG investment itself was considered something different. And so PRI was signed. And if you look up until 2023, sustainable investment assets in that framework, it's increased 20-fold. And the MHLW announcement, although past track record does not predict the future, GPIF created a category where investment would be based, or MHLW made a category where impact would be considered in their investment. So impact considered investment and investment strategies to make this happen is something that emerging managers will merge to create good things. And the good things will stay. And such a scenario is what we envisage in our daily activities.
Thank you. Emerging managers like yourselves can generate return and impact, and such outcome provides positive feedback, and that would stimulate more momentum in investment. Last words, hopes for the future. Hata-san.
Thank you very much. I will build more cases, I have been repeatedly saying, in capitalism to generate impact is an area that we want to pursue. If there's anyone here who's interested in our company, I'm very happy to talk to you. Thank you.
Oka-san? As was mentioned by Mr. Hata, in the context of capitalism, we want impact investment to be taken for granted, something given. So we want an ecosystem where people think that it's only natural to allocate funds into impact investment. So we hope that this becomes conventional investing. And we will do much communication so that we would be able to build up the environment. So if you're interested, please contact me. Thank you very much. And thank you for taking me. Lastly, Sakamoto-san.
Thank you. We discuss this frequently in our company. Impact investment and sustainable investment in the investment world. Very unusually, collaboration is relatively easy to do. So with those of you that are here, we want to cooperate so that impact considered investment can gain momentum. So I'd be very happy to talk with you. I look forward to doing so. Thank you.
Thank you very much.
Thank you very much.
I truly hope that the panel discussion would become the basis to promote more debate on impact investing, and we truly hope that our conversation was useful to you. Thank you for your kind attention. I give the microphone back to the MC. Thank you very much. Can we show our appreciation with a round of applause?